Do you want to know how to avoid penalties on your estimated taxes as a small business owner? Well, that's what we're going to talk about today. But before we dive in, let me introduce myself. My name is Linda Tuttle, and I help entrepreneurial women maximize their income through tax savings and business systems so you can live your life to the fullest. That's what I get excited about, is helping people maximize their income so you can live your life doing the things that you want to do. So today, let's talk about estimated tax payments. What is an estimated tax payment? Well, you may not be surprised to know that the IRS likes to receive their money on time. So this can be done either through withholding, through your paychecks, or through estimated tax payments. If you are only a W-2 employee, you have withholding taken out of each paycheck. Your employer sends it into the IRS on your behalf. It's withheld in equal amounts. You don't need to worry about estimated tax payment. But since you're watching this, I am going to assume that you are a small business owner. So you may have a job as well as a side business. So the withholding is still taking place. If you have a W-2 job, your employer is still taking that out equally. But if you are making a profit from your side business, you also need to be making estimated tax payments in addition to that withholding that's coming out for your job. You may also need to make estimated tax payments if you have income from things such as interest, dividends, if you've got capital gains, if you're receiving alimony, other types of income that you are receiving outside of your W-2 job. Now, nobody I know likes to be charged a penalty in addition to the taxes that you already owe. So I need you to be aware of this. If you have income, you're not making those payments equally throughout the year, you may be subject to a penalty even if you pay the full amount of your tax by the due date of the tax return. So that's the biggest thing I need you to be aware. It's not only making the total payment due by, April 18th, but if you're not paying it equally throughout the year, you can also be charged a penalty. So that's what I want to explain so you can avoid that penalty. So I covered this briefly, but who must pay estimated tax payments? This applies to individuals, partners in a partnership. You can have an LLC, also an S corporation owner. Doesn't matter how your entity is set up. If you are a self-employed business owner, you need to be making an estimated tax payments and be aware of the rules behind this. The penalty is calculated based on your prior year. So if you had zero tax liability in the prior year, you actually don't have to worry about this estimated tax payment. However, I still recommend that you make them if you're making a profit in the current year, just because it's a whole lot easier to make your payments throughout the year rather than be hit with a big balance at the end of the year. But just know that the prior year's tax is a big factor in how this estimated tax penalty is calculated. There is a form called 1040-ES that helps you do a calculation as to what your estimated tax payment will be. You take your last year's income and expenses. It's a great starting point. Take those numbers and then look at the coming year. Okay, do you expect your income to be higher? Do you expect your expenses to be higher? Do you expect it to be lower? You can make calculations. Maybe you have a child that's going to be turning 17 or 18. You're going to lose the child tax credit. So you need to take those things into account. This is not something you're familiar with. Find a CPA that can help you. This is something I like to do for my clients. I like to look at their situation this year and then see, okay, next year they're going to be losing this credit, or like I said, okay, what do you expect for your income next year? And then you can do the calculation based on that. Once you've calculated that ballpark number of what your estimated net income is going to be, then you need to make payments spread between 4 pay periods equally throughout the year. Those due dates are April 15th, June 15th, September 15th, and then January 15th of the following tax year. Now keep in mind, if the 15th falls on a weekend or a holiday, sometimes that date gets bumped by a couple days. Again, if it falls on a holiday, but generally keep those dates in mind. April 15th, June 15th, September 15th, and January 15th to make your estimated tax payment. You can avoid this penalty by making sure that you have included payments of at least 90% of the prior year's tax. Now keep in mind that's the actual tax due, not the amount that was due with your return. So it's 90% of the prior year's total tax or 100% of the current year's tax due. If your total tax due at the end of the year is less than $1,000, you can also avoid this penalty. So that's how you want to come up with that, safety net of how much tax to pay. Like I say, if you've paid 90% of the prior year's tax, you can avoid any extra penalties. Now, there are several ways that you can make this payment. There is a form that we talked about. There's a little voucher called 1040-ES, and you can mail that in with your payment. I kind of don't recommend that with the mail because it's easy for things to get lost, but you can also go to irs.gov/payments and make your payment there. But the way that I recommend, the most secure way, is to set up an electronic federal tax payment system account, EFTPS.gov. And through that account, you can make your estimated tax payments and you can keep track of it. You can see and make sure you're applying it to the correct payment. You always want to make sure that you're showing which quarter and year that you're making the estimated tax payment for. So these are just a few quick tips on how to avoid those penalties for your estimated taxes. Hope you found this helpful. And don't forget to catch my free guide down below on 9 foolproof ways for online business owners to be more profitable. You can connect with me if you'd like help with your taxes, and hope to connect with you soon.